Wake up, buyer payer people. It's a beautiful day. Go grab yourself another cup of joe and say hello to Jim and Michelle Rhoads on the Buy Here Pay Here Morning Show. Take it away, you two.
Hey, we're just getting right into it and already have our guest on the screen and ready to go.
Welcome to Hugo Sanchez. Many of you recognize Hugo, a colleague and friend and trusted CPA out of Houston with Butler Sanchez CPAs. And Hugo's been kind enough to join us today to talk operating expenses. We got on the screen there that we previously recorded. So this is being recorded in anticipation of our Friday broadcast, as we'll be traveling to NIADAs coming up, Hugo. So we're headed up there. I'm sure you are too. So we're just making a little time to get this recorded. But we brought you in to talk about operating expenses versus cost of goods sold. Something comes up quite a bit in our V8 system. So that's mostly what we came to talk about. But anything going on with you in Houston, any new developments with Butler Sanchez we need to know about?
We're just doing our thing over here. We recently started doing also offering wealth management for our firm for our clients. So that's kind of an add-on to our accounting services. But other than that, we are just crunching our numbers over here.
Wealth services is something that you used to focus on before becoming part of the firm, correct?
So I worked with very high net worth individuals. And so I worked with their financial advisors and state lawyers to kind of come up with their plan and all that. So yeah, I've got a background in that space, and I just, I saw a little bit of a need. A lot of dealers and were being sold some investment products or being, putting their money, leaving it in a checking account, things like that. So I said, you know what, let me just do this myself, right?
That makes sense.
Might as well get it done right.
That reminds me, we're going to want to schedule Hugo for another conversation, because I have a whole thing I want to talk to you about that in the buy here, pay here world that we live in. Obviously, buy here, pay here is an interesting business because of the timing of wealth creation and the RFCs and the reinsurance pieces and all these different moving parts. And so we'll save that conversation for another day. Today, we'll get kind of granular on the the operating expense side.
First, I just want to say thanks so much for joining us. We really appreciate you taking some time out and being willing to kind of just work around a little bit our schedule, since we aren't going to be able to do this on Friday as normally planned. So we really appreciate you joining us.
No problem. Thank you guys for having me.
Yeah, absolutely. We need an expert when it comes to these kind of things. So I'm glad you were available. So again, this came up partly because of V8 conversations I'll have with dealers. They'll ask me a question about where to categorize certain things, when they're turning in their V8 data. And so that kind of made me realize there's a need to really clarify some things when it comes to just expenses versus cost of goods sold. And so that I think, they both come off of your profit, but we really have responsibility to kind of get those things separated. So we might just, if anything comes to mind, Hugo, as far as common expense or common mistakes that you see with people making, or the kind of things that you guys have to sometimes maybe redo that dealers have done in their system, whatever. Anything come to mind there?
So the biggest thing is I see a lot of people overthinking it, right? A deduction is a deduction, whether we call it an operating expense or cost of goods. If it's a legitimate business expense, we're still going to be able to deduct it. It's still, you're not going to have to pay taxes on that. So don't overthink it too much, right? That's kind of the first thing I see, is that people are a little too focused on, hey, where do I code this in my chart of accounts and all that? Yes, we want to be accurate. Yes, we want to be as consistent as possible. But if you code something that ends up being, cost of goods fuel versus, it ends up, under office supplies or something by accident, not the end of the world.
Yeah.
Right? So
it's still making an adjustment to the bottom line, which is going to affect the income, which is what you're all about, is making sure the income is reported correctly. And that those are both coming off of those are getting deducted from income. So we don't have to overthink it. And having said that, we recognize there are standard practices in accounting, which brings me to something else I want to talk about, because this is something I've seen way back since I first got in the business. And obviously I wrestled with this as a dealer myself, is this idea of posting certain expenses, and I've got some examples we can get to if time allows, but in posting expenses like to the unit, let's pick something like fuel, just as a common type of, send somebody to the gas station with a card and they $100 or something. And so when it comes back in, talk to us about the idea of posting those expenses to the unit. Like if that was 5 cars and 5 different stock numbers, what's our obligation about that? Because I know we crossed into, there's difference between operational management, right, where dealers want to know that, versus the actual accounting of it. Can you help us with the accounting side?
Right. Yeah. So the actual accounting and, IRS code sections, all that good stuff says that, hey, anything that you can individually kind of apply or follow back to an individual unit needs to be, added to inventory. You can't just expense that. Again, going back to the fuel thing, if you go and get $20 worth of gas, if that car's still in inventory, that $20 is technically part of your inventory, right? Because that car has not been sold. So that would not be an operational expense. It would become cost of goods sold once the car is sold.
Okay. So I just wonder, what would be, why the distinction? Like, why do they want that attachment? Is it has to do with scheduling and depreciations and that kind of thing?
So there's an IRS principle, just the matching principle, right? So what they're requiring us to do is to match up our revenue to our expenses. And so the IRS says, hey, because you are not picking up any income, you're going to pick up that income when you sell the car. At that point is when you can take those deductions, anything that has to do with the selling of that car.
I see.
So because that, any make ready, any parts that you buy, tires, whatever, get fuel, if that car is sitting in inventory, you have not picked up any revenue from that vehicle. So you cannot deduct any expenses associated with that vehicle.
Okay. So that leads me then, you just touched about fuel, and I have in the same bucket, I asked about GPS. So GPS to me is a little bit different in that we're ordering in some hardware, 20 units come in, we put them on, 10 of them stay in boxes and 10 of them get unpackaged and put on a certain car. Walk me through that one. What would you have dealers do with that invoice for the 20 units?
Yeah. So, very simple. You just allocate a dollar amount to each GPS unit, right? If you're buying them for $100 a pop, 120, whatever you're spending on them. So your invoice comes in for $1,000 and there's 10 units. Just divide the $1,000 by the 10 units, $100, and you would add the $100 GPS unit into to the stock number.
Into each car. Okay. So I can imagine a scenario, because let me just be the dealer or the manager who's saying, well, we ordered 5 or 10 extra that aren't associated with the units yet. We're not installing them yet.
Right.
What am I to do with that part of the invoice?
Well, so technically that's just going to sit as an asset, right? Because it's something that you own. And you don't get to write those off again, because in the future they're going to be connected to a vehicle. Okay. So in a perfect world, right, you're gonna debit an asset, right, unused GPS unit, something like that, and then once you put it into a car, then it'll go from that unused GPS units account into inventory because you've attached it to a vehicle.
So Hugo is, as a CPA, he has some version of an oath where he's, responsible to hold these certain principles.
Hippocratic
he's got a responsibility. I don't have that. I'm not a CPA, so I can tell you that obviously in working with dealers, they, they're obviously things are moving fast, and they're it's not that they have bad practices. They just might be inconsistent about some of these kind of things. But what I'm hearing you say, it would not be proper in that example to charge the whole invoice to collection expense because it's GPS and that's why we have it. That would not be proper accounting. I certainly wouldn't want to do that and then attach them to the unit in my DMS, because now I'm going to have it almost expensed in 2 places. Right. So when from an administrative management standpoint, when it's reasonably possible to do so, you're saying we really want to attach, a set of spark plugs to a certain unit, a $20 gas voucher to a certain unit, right? Is really what is preferred.
Right. Yeah. That's, again, perfect world. Everything that can be allocated to vehicles should be allocated as make ready.
Okay.
I understand that in the real world, we're probably not going to sit down and do that. Right.
Yeah.
Well, it
It's a
almost would
little,
require a whole nother person just kind of keeping track
yeah,
of where everything's going.
Yeah.
it's a little bit of a balance. And that's why some dealers use pack fees too. Right. So instead of having to track all those little things, it's, hey, let's just throw in a, $500 pack fee, $700 pack fee. I'm already getting all itchy talking about pack fees because as an accountant, again, I am not a fan. But I understand that, to make things work, we sometimes have to do that, right? If your commissions or anything are based on gross profit, gross in the deal, then throwing in that pack fee makes sense.
I'm kind of getting that you have about the same love of pack fees as Jim does.
Perfect. Yeah.
Yeah. This stuff gets messy.
Uh-huh.
So, and by the way, I just did a quick search while we were talking. I looked for perfect world auto credit. There wasn't one out there. So there's no perfect world auto credit. It's just, I get it. It's not that easy. Like I said, things are moving fast, but I think obviously we want to avoid anything that is double expensing something. That's something that would be an avoidable problem in accounting that I know you'd want to see. Let me ask about this other one about the timing, because I'm familiar from past experience, again, as a dealer myself. My example here is the detailer's invoice. So let's say I got 8 units finished. An invoice came in for $100 each. So I got an $800 invoice here for units. So based on what I understood you say, I would post those units to my post the individual details to the units that got the detail, right, to the extent that I could identify them. And then is that going to affect my cost of goods sold for that month if those cars haven't sold? They're in inventory, still an asset. It's sitting on the ground, hasn't sold. I realize it's not going to show up in the cost of goods sold that I would run in my DMS, but from an accounting standpoint, is that going to hit my cost of goods sold for the calendar month where I posted those?
No.
Okay.
So though anything for inventory, stock still in inventory is going to be on your balance sheet as an asset, as part of your inventory. Is that all those little make ready and everything increases the value of your inventory, and it will not affect your P&L until you sell the vehicle.
Okay, got it. And then another one that is, it's not quite cost of goods sold, and it's not maybe operating expenses, but let's talk about sales tax for a minute, because this is another one that I see. Obviously, a lot of dealers have sales tax. Most dealers have sales tax. It's a question of how and when they pay it, right? But if I'm a dealer, in Middleville, America, and I write a check today for the sales tax that I owe on last month's sales, for example, talk to me about where that lands in my accounting.
So sales tax, the easiest way I try to explain it to people is, hey, that is never your money, right? So it's never going to be income. It's never going to be an expense. When you collect your sales tax from your customer, it typically goes into a liability account, because that's just money you owe somebody else. Mm-hmm. And then when you go and pay that sales tax, it'll offset that liability and make it go away. So sales tax will never affect your P&L. It's never, never increases your revenue. It's never an expense, nothing like that at all. It just is an in and out on your balance sheet.
Got it. It sits in our bank, and it's a fiduciary responsibility we have to another party. And so it sits in our assets as cash, but we have an offsetting liability. We owe that to somebody else, and it's going to pass right on through and get it dealt with, but it's not going to hit our P&L because it's not a revenue or expense related thing.
Right, exactly. And there's some states where you can't, in Texas, we can, defer sales tax. So we just collect it from the customer. There's some states where I've seen dealers, they can't defer it, but they just kind of built it into the amount financed, and then they pay it. So, that's not exactly flow through in that sense. There is a little bit of a timing difference. But for the most part, sales tax, right, it just in and out and doesn't affect your profit.
And so for our dealer listeners who are not in Texas, you heard Hugo right. In the state of Texas, dealers get to collect the sales tax from the customer and remit and as part of a seller finance tax program, I think the dealer has to enroll. But if they enroll and they're qualified, they can actually collect the sales tax on a buy here, pay here note over the note and remit as they collect. And so that's a tremendous advantage. I know it's polling time in parts of the country. Ask a legislator near you if you can get that in your state as well, because that's something obviously a lot of buy here, pay here dealers benefit from cash flow in that regard. But yeah, I could say, Hugo, you answered the questions I had. I'm sure we left some stuff out. I just think this is part of where we see dealers kind of get tangled up. And I'm one who I never want to have dealers add layers of administration where it's not necessary. Clearly, we want to be able to track our actual expenses. But I think you're right about overthinking. Like in the end, if a $20 fuel ticket goes on a Honda instead of a Toyota, that's probably not worth spending a lot of time chasing after, just because it still hits our expenses. And I think for most dealers, it's the overthinking part you're talking about, is like the idea that we had $20 more in one unit, versus another one, is definitely something that, I think that dealers might get tangled up in overthinking and just exhausting a lot of time in administrative manpower, just chasing after that sort of thing. Did you have something?
Is there anything in as far as expenses, because that's what we've been talking about, that you wish dealers would change how they enter it in? Because, there's a lot of different things, but there's always, you hear from regular CPAs will do things very differently than a specialty buy here, pay here CPA will do. And so give us a one or two or whatever the top list of things that are wrongly categorized that you just wish that dealers would fix.
Sure. How much time do we have now?
As much as you want. We could just do another show.
No, so I think, again, the biggest thing is not overanalyzing it. To answer your question, it really depends on whether you've got integration turned on between your DMS and your accounting software, or whatever, if it's built into your DMS. That makes a big difference on how you should be handling these things, right? So the biggest mistake that I see is somebody that, doesn't have the integration turned on, right? So the DMS is separate from their QuickBooks, and they're trying to do things in QuickBooks as if the integration was on, because that's what somebody in the 20 group, that's how they do it, or, that's how they handle it. Where you're probably, you're not being as efficient as you could be, because that integration isn't there. And if you do have the integration turned on, then, again, making sure that you code those, the make ready or anything into those, to those individual stock units, it should be properly making those journal entries and, recording those transactions. So you've got to be careful in the sense of, the GPS thing that you were saying. If you do add those 5 GPS units, well, you've still got to record the full $1,000 invoice somewhere else, right? So making sure that that's being done properly is a big deal. But it really just depends on whether that integration is on or not.
Do you find that most DMSs, I'm sure this is not a trick question, but most DMSs have the ability to integrate, or is it just depends on the DMS?
I think they all have the ability to integrate at this point, and most of them work well. The problem is, what I typically recommend for a dealer to have when to have the integration on is if they have somebody in-house kind of monitoring the books on a regular basis, right? Because most of the integrations are, they're constantly making a ton of journal entries. Think of the number of transactions every time you have, somebody comes in to make a payment and all that. It's making all these journal entries. So if it gets one thing wrong, it becomes a compounding problem, right? So it gets harder to reverse. So, the integration's good if you have somebody watching it very closely. If you don't have somebody watching it closely, then I typically recommend you don't have that integration on, but be using a CPA that's asking for those DMS reports, because there's data in there that we need to have an accurate set of books.
Yeah, someone's got to go through and make sure that everything lines up.
Correct.
Yeah.
Right.
Yeah, and we don't want that to be the CPA, because they are expensive. It really doesn't make sense for our CPAs to be doing a lot of that stuff when it can be identified in the process and addressed over there. This always happens, Hugo, when you come around, because just in our conversation here today, you prompted me to think about at least 3 other tracks that we need to come back and dig into. So I'll share with you and our audience kind of what I'm thinking about. One would be onboard accounting. Like there are systems that have general ledger accounting, and then there's some that integrate with a QuickBooks and push to a QuickBooks. So there's a whole conversation for us to have around technology on that alone, because I just find that, as somebody who works with dealers from an operational standpoint, often in the early stages of helping them get set up, we've kind of formed our own ideas and suggestions around that. I'd love to flesh that out with you in a future conversation. And then another one is this whole notion of how we handle repos in terms of those dealers who resell their repos. And it's not even so much the accounting. I think the accounting can be maybe fairly straightforward.
Right.
But I think what I hear is, I know what I hear is dealers start to think about their cost in a repo in a way that is not real.
Yes.
So
absolutely.
I think this is something that I think we really probably should make time to get back together and dig into that one a little bit, because I think we could walk through, step 1, step 2, step 3, and kind of show the accounting aspect of each, and I could kind of add my operational suggestions on some of this. And I know you and I have had conversations. I remember Amanda being part of the conversations around a recommended repo procedure. That's one thing. Then it's how to think about what you actually own the car for once you're in a repo cycle. So that would be a fun conversation to bring fun for me and Hugo. I don't know if it's really fun for anybody else, but
I just like being here, fly on the wall. I might have a question or two.
No, it's all good.
Yeah.
So there's a lot of stuff to talk about for sure. And but we appreciate you making time to come sit with us today. This is a good bit of feedback for dealers to think about. And so I think you guys know how to find Hugo. If you ever can't find him, reach out to us. They're on Facebook. You can find Butler Sanchez CPAs over there. What's the website, Hugo?
So we have BHPHCPA.com.
Nice.
Very nice. Yeah. That's easy. That you don't have to remember all the, it's just BHPHCPA.com. Perfect.
And they probably don't do as much of it, but they can do LHPH accounting too for lease or pay here. So, they can certainly do that thing. And so glad to hear that you're stepping into, wealth management. That's clearly you've got some clients that have some wealth and
we see when dealers have been doing this for 20, 30 years and they're looking at an exit or, shifting to the family taking over or whatever. It's like, how do we manage all the things so that we don't have a hiccup in our lifestyle or whatever. So that's
the planning for that needs to start very early on, right? You can't come to me like once you've already sold or, hey, I'm doing this next week. It gets a little harder.
So at what stage, just really quickly, at what stage do you suggest that you get started?
Ideally, a couple of years before you even are ready to step away, right?
Okay.
Because you can structure the business in a way and start making moves very early on to make it as most, tax efficient as possible.
Yeah. So if you are looking to leave the business sometime, half decade, next 5 years or whatever, make sure you give BHPH accounting. No, BHPHCPA.com a holler, and then Hugo and Amanda and their team can help you with that. Hey,
some of our dealers think about exiting the business every time they look at their repo report. Like every other week they're thinking of exiting.
I'm
exaggerating, but
it can be a really stressful business too.
For sure.
So, all right, everybody, thanks so much for joining us. We really appreciate you taking your time on a Friday, and we're obviously not doing it on a Friday this week, darn it. Yeah. But it is my birthday. That's a good excuse.
Friday's your birthday.
All right, everybody, thanks again so much, and we will catch you on the other side.